At this same time, Mondays and Tuesdays, we check in with Todd Horwitz with Bubba Trading. And today, a good day to get his thoughts here just a little bit on what he thinks of all of these markets. Boy, there is a sell-off all the way across the board today, Todd. In your opinion, is this justified? What does this mean for the markets? Kind of give us a little bit of a breakdown in your thoughts.
Good morning, John. I tell you what, you know I don't usually follow the news, but this is not regular news. This is unexpected. This is more of a black swan type of event. And typically, traders, investors, farmers, producers, everybody overreacts to the news that's going on. What I would be looking for here now, this could be across the board in the agricultural space, a buying opportunity of a lifetime, because what you're seeing here is you're seeing some panic selling. Okay, we're pushing things down that maybe shouldn't be going down as far as they are. And nothing has really necessarily changed. I mean, if you're a fan of the China trade deal, whether you are or you're not, that's still in place. So the real issue here is the virus that's floating around, which will halt everything for the time being. And all that's doing is creating a little bit more panic in markets, which is going to create more of an opportunity to buy them. And if you take a look at corn has come back a little bit. Wheat has come back, almost 65 or 70% from its lows this morning already. So we're already seeing things starting to turn because eventually they will solve this issue and we'll get back to the free flow. So this is not the time to be selling. This is the time to be looking to be a place to be a buyer.
Okay, let's look at those numbers and see where we're trading at right now. Over here in the corn market, we're down 7 1/4 cents. And just as Todd mentioned, we are off of the low, 380. The new crop December down 4 1/2, 393 3/4. In the soybean market, March down 7 3/4, again off of the low, 894 1/4. The September's down 8 1/4, 926. And as Todd mentioned, in the wheat market, March Chicago down 3, 570 1/2, off of the low of 559 1/2. The July is down 4 1/4 at 568 3/4. July Kansas City wheat down 3/4 cent. Now we're hovering right at $5. So we're 8.5 cents off of the low here, 7.5 cents, 8.5. Let's look at what's going on with soybean meal and soybean oil also here, with the March soy meal contract down 170 at 296.60 a ton. And the oil market for soybeans for the March down 71 cents at 31.31. Todd, we'll come back. We'll talk about that sell-off also over in the livestock trade and discuss that just for a moment as well. Stay with us here on the Market Day Report. Let's look at crude oil and some of these other outside markets as we get into the livestock segment here. Also, we've got March crude oil 52.59, down $1.60 a barrel. All of these contracts at least $1.45 lower. Todd, you said we could put a 4 in front of this crude oil market. Look where we're at here. We're not too far from putting a 4 in front of it.
I think you're going to see the 4, John. This is another news item. This is part of the black swan event. Not only was crude already breaking down on its own, but now with the slowdown, with the virus scare, you're going to slow production, which means you're going to slow transportation, which means the big glut we already have in oil is going to get a lot bigger right now for a while, which is why you're seeing many of the airlines, like all the things that are involved with oil are going down right now because, again, there's going to be a tremendous glut built up in this oil right now because we're going to slow production and transportation. So for that reason, plus the fact that it already was bearish, has a great chance to push it in the 40s. If this extends through the week at all, it could be in the 40s this week.
Oh, wow. Well, here 30 minutes ago, we were within just a very short throwing distance of being limit moves over in the livestock trade as well.
Well, again, this is more of a fear trade. Now, again, they looked a little bit weak at the end of last week, and I know the cattle on feed, some people say it was bullish, not bullish, but neutral to bearish. It looked like it was bearish to me, and again, I don't read reports, I don't care, but it looks like we were under a key level. We're breaking down, and we're getting help from the virus. Now, I will compare this very much to the Tyson fires. This is being well overdone to the downside, and I'm not saying this is the exact minute to step in, but you should be looking for a place to get in soon, because this is an overreaction to either a report and the virus all at one time. So you're getting a great opportunity to get in at much lower prices right now.
Let's look at those futures numbers, and then I want to come back and talk about how this could affect the dollar as well, and we'll check the dollar. First of all, we go to the live cattle market. We are down 205 on the Feb contract, 122.80. April down 288. So here we're just a shade over a dime from a limit move. June down 263 at 113.40 over in the feeder cattle market. Earlier we were half a dollar away from a limit move. We're even closer than that now, with March down 413, 135.55. April down 415. Remember, a daily move is 450, 138.35. And in the hog complex, here we are with February down 145. And Todd, this is a perfect example of what you were just talking about. The far out deferreds are seeing bigger, steeper losses than the nearbys, because you go out to May, we are now down the limit at 76.97. The June is down 278. That April, our next nearby, is down 270 right now. So we have touched limit lower here. The dollar, on the other hand, has been higher. And just a moment ago, we were about 120 higher. Now we're in that 90 point to 120 point range here. Closing in up here at 90, on the upper 97s, getting closer here to 98. Now, the thing that you've been talking about, this dollar going to par, doesn't look like it's that far out of reach. Is this the safe haven today?
I think it is. I think that's what you're seeing pretty much across the board, John, is a lot of money flowing into safe haven assets, which is bonds, dollars, and gold. And they're all higher across the board. And the dollar itself, from a technical standpoint, at a key spot. If it breaks above here, I would say we're going to par again. This is, again, we went from trying to break it down, couldn't get it lower with all the manipulation from the Fed, and now here we are trying to break to the upside again. So if this fear continues and we break above, it's going to bring in technical buyers, which would certainly have a good chance of pushing it to par.
So that 98 level, is that where you see the resistance we need to get out above?
Yeah, I think it's going to get out above it, actually. I mean, I think we're going higher from here. I think the one problem, when they tried to break it down, you couldn't hold it lower, and it is now coming up very sharply. And I believe it'll break out, and I believe this will be par without much of a problem. And I wouldn't worry, as a farmer and producer, I wouldn't worry about that here, because again, even though they correlate, they don't necessarily correlate day to day.
Right.
They'll correlate over the long time. But in the meantime, we're seeing lower prices in grains for one reason and dollars for another reason.
All right, Todd, thank you very much. Always appreciate it. Good to visit with you today. We'll talk to you again tomorrow. Todd Horwitz with Bubba Trading there in his office in Redwood, Illinois.
We could see some big swings between today and tomorrow. Okay, we're going to be watching it very closely. Thank you, John. Appreciate that.